Welcome back to Candlelight, where price is a mechanical function. Today I'm going to be going over how to choose or how to pick short stocks. Now, shorting's got a bad rap to it because you hear things like it's really risky, or you're betting against America or the company, or you hear short sellers putting out false rumors to take advantage of an unfair situation. Shorting is just as normal and natural as going long, right? Price goes up and price goes down, and you can make money going both ways. You're not biased to either. You're just doing what you should be doing, which is buying in demand and selling in supply. Now, if you want to understand, how to read price action and how to read price movement, or get better at technical analysis, you need to be square with the fact that if you look at a chart, there are areas of overwhelming demand and overwhelming supply. Which is why in prior videos I've said a chart is a chart is a chart, because I generally don't care what I'm looking at. I can be, if I look at a chart for stocks or currency or futures or crypto, it doesn't matter to me. And in fact, if I'm looking at stocks, I rarely know what stock I'm looking at, because I don't need to know. All I need to know is that an area of overwhelming demand, or is that an area of overwhelming supply? And then if it's demand, I go long, and if it's supply, I go short. It doesn't matter. And if you look at a chart, price action can show you, or will show you, that the areas where price leaves ballistically from that area, either to the upside or downside, those are areas of overwhelming demand or supply. So if you're going long, you want to be going long in uptrends. If you're going short, you want to be shorting downtrends. What you don't want to be doing, in fact, the last thing you want to be doing is, if you're going long in an uptrend, great, but you don't just want to buy. And if you're, shorting in a downtrend, you don't just want to short. You want to be doing it at the right place and at the right time. So if you're doing stocks, the best way to do it is look up the sector ETFs. ETFs are exchange traded funds. And that's essentially, XLE, for example, is the energy sector, and it's comprised of all the stocks in the energy sector, or XRT, which is retail, or XLF, which is financials, and those are ETFs that, or those are the spider ETFs from the NASDAQ. But there are other ETFs out there, and all you need to do is do a simple cursory search on Google, sector ETFs for the U.S. market or something like that, and you'll find the ETFs. But the New York Stock Exchange's spiders are really popular, and I think there's 11 or 12 of them that comprise all the sectors for the U.S. stock market. So if you're going long, you want to be going long stocks in the strongest sector, and then if you want to go short, you want to be shorting stocks in the weakest sectors. So this is how you do it. This chart here has about 11 or 12 lines, and each line is representative of a sector. Instead of putting candlesticks, I just overlaid all the line charts that represent each sector on one graph, so it'd be easy to follow, and for it to be really obvious which ones are the weakest and which ones are the strongest. Now, all the strongest stocks are obviously at the high, and your two laggards, or your two weakest sectors, are XLE and XLU. XLE for energy and XLU for utilities. So if you're going long, you want to be going long all the other sectors, or the stocks in those other sectors. And if you want to short, you want to be shorting the weakest sectors. So this is a really easy way to kind of see in comparison view to each other which ones are the strongest and which ones are the weakest, and then you go long or short accordingly. Now, another easy way to do this, or another way to do this, is just look at the chart by itself, or look at the sector by itself. This is SMH, which is semiconductors. This is in a strong uptrend, so that's something that you'd want to go long. XLB, building materials, that's also in a strong uptrend. XLE, you'll notice, is in a downtrend. Now, granted, it was, it fell really, really hard at the beginning of 2020, and then it's rallying, but it's coming up into supply. So we're probably going to get a bounce there, and the reason that supply is, that's the origin, if I can get this color right, that's the origin of a strong drop, of a ballistic movement down. The only thing that can make price drop that hard is overwhelming supply, and the origin of any strong move is where is where the imbalance is. So XLE is in a downtrend. You want to short downtrends. So I wanted to put this in comparison to these other three, and the last the last uptrending ETF is XLF Financials. That's also in an uptrend. You can clearly tell that this is strong, this is strong, this is strong. XLE is weak. So you want to short energy stocks. Same is true for, oh, sorry about that. Same is true for industrials. XLK, which is technology. XLP, which is consumer staples. XLU, which is utilities. And once again, you'll see on XLI, XLK, oh, I forgot to put the trend line there. Sorry, guys. XLK, also in an uptrend. XLP uptrend, and then XLU had this massive drop and has still not made a higher high. And by higher high, I mean this. Anytime that you have, I think I can do it like this. Yeah, let's do it like this. Anytime that you have a swing high and then a swing low, price needs to break above the next swing high right here for it to be in an uptrend. An uptrend is any price action that's making higher highs and higher lows. So it needs to break above, and then as soon as it had a higher high, then you're officially in an uptrend. And another easy way to explain an uptrend, because this was really clear, is this section right here. This is a beautiful, sustainable uptrend right here, well, up until it got to right here. But this is beautiful. You see, this is the swing low. Here's a higher swing high, higher swing low, higher swing high, higher swing low, and it just bounces. And every time it comes down not as low as the next lowest point. And every highest point, the swing highs are always higher than the previous. This is a beautiful uptrend. That's something that you want to be going long, and you want to go long in demand zones, right? Demand zone right here, and demand zone right here. Sorry about that. And you want to be entering long in areas where there is a roaming demand, and then price will go up. Price took a massive drop here and has yet to make another swing high, because there's a lot of supply here. You see, like, the bounces are kind of strong. So that's why XLU is one of the two ETFs that are the weakest, because, well, it had a massive drop, and all the other strong ones are still in uptrends. So if you want to go short, you want to be focusing on XLU and XLE, because those are the two weakest sectors of the whole U.S. stock market. And if you want to go long, you need to be going long everything else. So this is what you do when it comes to picking stocks. So if you're shorting, you want to be focusing on XLE and XLU. XLU is down here, and I'll get down to it. So the way I have it set up, and it's really simple, is just, again, you can go on Google and just say, hey, I want a list of stocks for in the energy sector, and you'll get probably an Excel sheet with a whole bunch of stocks in it, and then you just kind of categorize it and build essentially your own magazine of or a catalog of stocks, and you just kind of put it under XLB. You have your stocks. XLE, you have your energy stocks. Financials, you have your financials, and then you just go through them and pick good zones. So XLE is a sector that we want to go short. Now, here is a swing high that needed to break above to hold an uptrend. Now, you want to make sure that even though XLE is a weak sector, you want to make sure that the stock is also giving you a good setup. So far, this is your swing low, swing high, or higher, swing low, swing high, higher swing low, and higher swing high. So price is still in an uptrend. This is the demand zone where you have ballistic movement that sent price ballistically away from that area. Price is now coming down into it. That's a strong demand zone. And it's also in an uptrend. This stock has yet to be, or has yet to give you a a downtrend because it still is making higher swing highs and higher swing lows. So even though it's in XLE, not a very good setup. You want to be getting really good setups or really good supply zones. And if this drop base drop, you see ballistic movement out, that's good supply. Breaks below, in other words, sends price below this demand zone, then now it's making lower swing lows, and then when price rallies into supply, which will be here, and let me paint that red, which would be here, and then continues the downtrend, then it'll be in a downtrend, and then you want to be shorting the supply zones that are being created after that point. But price still hasn't done that yet, so this is not a very good setup, which is why you just go on to the next one. This one again is still making higher swing highs and higher swing lows, and there's a really good demand zone here that price still has not broken to give you any kind of downtrend. So XLE is really not giving you that many great setups. This one again, higher swing high, higher swing low, higher swing high, higher swing low, higher swing high. It's still very much in an uptrend. So while this is a good sector to be looking at to go short, you're not getting a lot of really good setups here. So let's go to XLU, and you're going to see a huge difference. XLU, or the sector XLU, and then American Electric Power, this is in a downtrend. See how it's making, you have your swing high, swing low, lower swing high, lower swing low. As soon as you get 1 and 2, at that point you can put on a trend line, and it's following it beautifully. As soon as you have a swing high, swing and swing low, lower swing high and lower swing low, then that's when you have a trend, and then you short supply zones. And notice anytime you have ballistic movement here, this drop base drop, that's a really good supply zone. When price re-enters that area, so after it leaves, you wait, and then you short in areas of supply, and then it falls from that area. Another ballistic movement away from another zone is right here. And then when price gives you a supply zone, you wait for price to re-enter it, and that's when you short, and then you get follow through to the downside. And if price is in a downtrend, it should continue to make lower lows, which is increasing your profit potential. Now, a quick note, whenever you go long or you go short, you always want to have a stop loss, and a stop loss is essentially an order that takes you out of the position that you were in, both long and short. If you shorted, you would have shorted at the beginning of this zone right here, and you would have had a stop loss right above it. Because if price breaks a supply zone, then by definition it's no longer in a downtrend, because downtrends respect supply zones, so price should enter them and then continue to fall. So that's why shorting is not any more risky than going long, because both to the long side and downside you have a stop loss. Your price is not going to go against you more than you originally planned to anytime you enter any trade, both to long side and short side. So this was a move that was already or that has already taken place. What you want to be doing is looking for areas like this drop base drop, and if price breaks below this low, then that will be another good future supply zone, because you have ballistic movement away from that area, and it's just a really good drop base drop, origin of a powerful move. It has not been tested yet, much like this one before its entry had never been tested. When price re-enters, it falls. Let's check another one. This is Dominion Energy. So right here, again, as soon as demand, or you have like your swing highs and higher swing highs and higher swing lows, as soon as they get broken, you get a swing high, swing low, lower swing high, lower swing low. Then you get supply zones. Oh, sorry, there we go. Yeah, something like right there. and then you just short those supply zones. Now, let's just say right here is a pretty good supply zone. This is the origin of ballistic move that broke this swing low. Let's just say that this zone is pretty, it is pretty big. Now what you want to be doing, because you have multiple time frame analysis, you want to be going from large time frame to smaller time frame, because on your larger time frame your zones are going to be large, and on your smaller time frames you can make those your entry points, both to the long side and short side. So to short or buy, you can make those zones smaller. So within this big daily zone, which on a 240 minute, so on my left I have a daily, on the middle I have a 240 minute chart. So every candle is 240 minutes or 4 hours. And on the right, I have a 60-minute chart. On your 240, that would be the daily zone right there. You know what? I'm going to go ahead and just use lines. That would be your supply zone. Kind of big. So what you can do is make it smaller. Let's just say right there to the open and close of those candles, and you only get the body and the high. We just made it a bit smaller. And then within a 60, this is the area that would be on a 240 minute. You can go all the way up here and just get the wicks, and that's the extreme high, and you can make it smaller, or you can go even all the way down to a 5 minute, and you're going to see all the 5 minute supply zones within that zone. Okay, so the whole zone, let's just say we go back to 240 minute, which would have been this whole thing. You see this drop, base, and then ballistic movement right here? That's supply. So within this massive zone, you just made it a lot smaller. That's where supply exists. Drop, base, pow, ballistic movement. So when price re-enters, and let's bring this back up to a 60, and you'll see how much smaller it's right there. And if we go up to a 240, look how much smaller that zone is in comparison to that. You're really fine-tuning where supply exists. And because this was the origin of ballistic movement down, it broke the swing low when price re-enters that area, just like it did ballistic movement down when price re-enters that area into here, it falls. This is a really good supply zone. These are the areas that you want to be looking at, or that you want to be looking for whenever you look for opportunities to go short. And you simply wait for price to go up into supply. Another one right here. Let's see if it broke the swing low. It's about to. Yes, it did. This swing low is 99.58, and this low is 99.51. So it made a swing low. This is the origin of, or up here is the origin of supply. And let's see how long have I been boring you for? Okay, we're gonna wrap it up after this one. This is the origin of supply. This is the origin of ballistic movement, to the downside. It broke the swing low. So this whole zone, actually, we'll probably, let's say we make this a bit bigger, right there. In fact, we can even do this from a daily. So within that big zone, and I'm gonna show you just how small we can make this. Instead of having this, huge big zone. Let's bring it down to, from this daily, let's bring it down to a 240. That's really big. Let's make it even smaller. That's the candle in control, this whole thing. So now we made it even smaller. Let's go down to a 60. Let's see what we see. Here we go. So now you see this origin, this swing high, and the origin of ballistic movement down of this whole leg. You can even do right there. So that's one zone, and there's going to be another zone right here. But let's go down to a 5 minute, and it's going to be somewhere around here. Watch. Also, it's the drop, base, ballistic movement down. Let's go down to a 5-minute. Here we go. Right there. Police moving down, and then, you know, just for giggles, you have this one too. So instead of risking a whole, and I'll get rid of this. Let's bring it back up to a 240. So instead of risking what was going to be an area probably, what, this big, that was probably your daily. You now have 3 really small zones, really good supply zones in an overall or in a larger time frame supply zone. And let me pull it back up to a daily. Yeah. So instead of risking this whole giant zone, you just short these 3 supply zones. And that's how it's done. You get the origins of large moves to the upside. Let price give you those supply zones. And when price re-enters those supply zones and it's in a downtrend, it should continue and break the next swing low that puts price back up. So if price falls and then rallies back in, it should make a lower low and, you know, continue to fall to the downside. And that way you sell high and buy low, which is what you want to be doing when you're shorting. So that's just a really simple, easy, and this is exactly how it's done. Search for how to pick short stocks is you just go to the weakest sector, you get stocks in those sectors, and you look for good zones that are the origins of large swing moves to the downside, and you just wait for price to re-enter those strong ballistic, the origins of strong ballistic moves to the downside. And if a stock or sector isn't giving you good zones like XLE was, while XLE is in a downtrend and or the energy sector is in a downtrend and is weak, all the stocks were still making higher highs, and all the stocks are about to get to the point where they're, if the demand zone that made the higher high or was the origin that made the swing high gets broken, then you're starting to make you're starting to have the beginnings of a downtrend. But XLU, the stocks here, are already making lower swing lows and lower swing highs, so you want to wait for price to rally, go into supply, and continue the moves back down because it's in a downtrend. So just because a sector is weak, it doesn't mean that the stocks are good picks. You want to be picking stocks that are in downtrends and shorting those supply zones. So it's really as simple as that, guys. I hope this was helpful. If you have any questions, just put in the comments below and let me know what you think. Either the way it's explained, more questions, or just if you have any comments, just I'll see you on the comment board. Take it easy, and I'll see you in the next one.